Hello and good evening, traders and aspiring traders. So it's the weekend. Welcome to the weekly recap where I review the trades I took. So because I took only 2 trades, I will do it as one video and I will combine them. So I took a trade on Tuesday and another one on Thursday, one win and one loss. So yes, welcome to how I traded the last week of August. Let's get into it. So we'll start with the trade that I took on Tuesday. And the trade that I took on Tuesday was a long. It was based on the idea that I had talked about on my weekly preview. If you are watching this, you should have already watched the weekly preview that I posted on Monday. So on Monday, I explained how I want to see the bullish fair value gap being respected, the weekly 0.5 level, and so forth and so forth. So going into Tuesday, I wanted to see a long setup being formed. And when I looked at my charts pre 8:30, I saw a long setup being formed. And as you can see on the screenshots that I will place right here, you will notice that at that moment in day, it was at around 7 a.m. New York time. The previous day low had been swept by on both assets, US 100 and US 500. Okay, so the previous day low had been swept and the daily fair value gap was being respected by price. So what did I want to see when I went into lower time frames? I wanted to see a sign of change in state of delivery to bullish. Since we had now swept the liquidity in form of the previous day low, I now wanted to see price reverse and trade back higher in line with the weekly bias that I had outlined on Monday. All right, so let's go back to the chart that I had already formed. So this is the US 100 and this is the US 500. So this week that you see right here is the one that I am explaining. It had formed because right now we are talking in hindsight. This is the liquidity sweep that had occurred. This was Monday's candle and then this was Tuesday's candle, and at 7 p.m. this previous day low had been swept by price on both assets. We had this sweep on Monday's previous low, which I labeled as my sell side liquidity, had been swept. If you are following me on Twitter or you are in my free WhatsApp channel, you will remember that I posted this at around 4:30. 4:30, that is 9:30, 9:34 a.m. New York time, sorry. So let's get down to the lower time frames. Remember, this video, you will understand this video better if you had already watched my weekly preview, because I am building on the idea of the bullish expansion that I wanted to see throughout Tuesday and Wednesday. Okay, so if you haven't watched that video, you will probably be wondering what I'm talking about, and you will also be wondering why I'm starting on a random Tuesday. So this is just a trade recap. You should have watched the other video. Okay, yes. So I will mark the midnight open for Tuesday so that we can analyze the trade better. Then I will mark the Wednesday or Wednesday midnight. All right. So all this is Tuesday's trading, and I caught the whole of this move, as I will attach the screenshot right here. I caught this move. So let's get into it. So as you have seen on the daily chart, when I came into the market, this sweep had occurred on a daily candle. We had already swept this liquidity. This was the previous day high. It was the 9 a.m. low that had formed on Monday and it had already been swept during the Tuesday Asia session, right? So after I saw that and I went into my other asset and it had done the same, that was an A plus long setup and a formation. Okay, give me a minute as I mark the midnight opens right there, and right there. Okay, so once, as I said, if you are bullish, I always expect price to first take to sweep some form of sell side liquidity before we reverse and proceed to attack buy side liquidity. Okay, that is how bullish price action is formed. You have to go low before we go higher. Okay, so as 930 as 930 came into, I had already marked these previous day highs. This was a previous day high. I'll just mark it. Previous day high, previous day high, previous day low, right? Which was formed. This is a previous day low in terms of midnight opens and stuff. Okay, and then we had this buy side liquidity right above the previous day high. Okay, so that was my main draw on liquidity on Tuesday. Okay, this buy side liquidity and the previous day high, but mainly the previous day high, right? So once I had those levels marked, I went down to the lower time frames as I waited for the 930 open, because on that day, we'll just check if we had news. I believe we did not have news on that day. This was the previous day low. And then we had the previous day high. Right there. You will notice that this previous day high on US 500, it formed some relative equal highs with the 2 a.m. high, between the 2 a.m. high and the 12 p.m. high. They formed some relative equal highs, which makes it a stronger draw on liquidity for Tuesday's trading. Okay, you need to note that, because anywhere where we have we have relative equal highs or something of the sort, that means it is a stronger draw on liquidity. Price will want to reach to that price point or price level. Okay, yes, so we have those levels marked on the 1 hour level, and you should note that I have started from the daily candle. I started from the weekly candle on Monday, then I came to the daily candle on Tuesday. Before I go to any other time frames, I started with the daily candle, and then after that I am now on the 1 hour candle, where I mark my important price levels such as previous day high, previous day lows, my drawn liquidity. I'm sorry, this is not liquidity, it should be marked as buy side liquidity, and I also mark the swept levels. Okay, so yeah, let's get into the 15-minute or the 30-minute. Let's just go to the 15-minute, because we can see that already on the open I had already gotten this sell side liquidity sweep, which we saw from the daily chart, the daily candle. So going into 930, all I want to see is some signs of reversal at any point right now, because I believe that the sell side liquidity to set up the long move had already occurred right here, right through these price points that I'm circling right here. Okay, so I will go to US 100 and do the same, narrow down into the 15-minute time frame. Okay, once I do that, so going into 9:30, what do I want to see? I'm observing any 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 price action that could hint we are about to get that explosive move to the upside, because that is what I want to trade. I want to trade that displacement to the upside. All right, I'll just turn that into a color that is more visible, and that equity open. Yes, then I'll do the same for the 8:30 open, because as I have been mentioning in my videos, the 8:30 open and the 9:30 open are are one of the most important time 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 aspects in ICT trading, basically, or in my type of trading. The 8:30 open and the 9:30 open. Also we have the midnight open, which I have marked. So those are among the most important times that we observe to see what price does at around those areas. Okay, so I'll just do the same on this, and I'll need to change these colors because I changed the colors on my chart. That is why it's taking me longer to label them. I'm sorry about that, but bear with me. Okay, now we are good to go. Okay, so right here at 3 a.m. we can see that we had a current daily low. This is what I normally label as my current daily low or my London session low. Okay, so on a bullish day, what do you want to see? We want to see the low of the day form London session low. We on a bullish day, on a typical bullish day, we want to see the low of the day form at the times between 2 a.m. to 5 a.m. Why those times? That is what is known as the London kill zone. So during those times, that is on a bullish day, I want to see the low of the day form. On a typical bullish day, I want the low of the day to form at between 2 to 5 a.m. And then on a bearish day, on a typical bearish day, I'm not saying on all bearish days or all bullish days. I'm saying on a typical bullish or bearish day. So on a typical bullish day, I want to see the low of the day form between 2 to 5 a.m. the London kill zone. On a typical bearish day, I want to see the high of the day form between the times of 2 a.m. to 5 a.m. Okay, so on this particular day, when we had already swept this liquidity and we had already swept liquidity, so our price formed this important low at 3 a.m. So already when I came into the charts at 7 and I saw that the low had been formed at 3 a.m., I noted that down as another bullish confluence, because you see I'm already expecting bullish prices, and price was respecting my fair value gap. We had already seen a liquidity sweep, and then now we are forming a low at we are forming a low at 3 a.m. and then you can see that the down close candles that form the low had already been traded into at before we even reached 8:30 at 7 a.m. So already we have some form of change in state of delivery. Okay, but then we also have these last down close candles that had formed this main liquidity sweep, the one that was responsible for the liquidity sweep right there. Okay, all right, want you to note that we had that sweep occur at around but that is later in the day, so bear in mind that the 8:30 and 9:30 open had not formed. So basically this was only labeled as my last down close candle. If you are in my channel and if you are following me on Twitter, you saw that I had posted this one. This was my whole chart labeling and structure before all that other price action. So that is what I had at the moment before 9:30. All right, that is all I had in price. Okay, so 9:30 opened, 9:30, the 9:30 open came, and this is what we did. We saw this quick movement in price to the downside, and it swept the 815 low. And then when I came to US 500, the ES, I saw that 9:30 opened, but it failed to sweep this low to the left, the 815 low to the left. So what does that become? It becomes my SMT. Bearing in mind that I already have my presumed London session low, which is the current daily low, and I assume that on a bullish day the low has already formed at 3 a.m. This SMT became more confluence that we are about to trade higher, okay? Because that is what we call a cracking correlation. When you see that, you know that price, the market makers are now ready to trade higher for the day. They are not willing to go any lower than that. SMT with SP500. So once I get an SMT, what do? I usually go down to lower time frames. So bear in mind that all of this price action, I'm doing this as it occurs. I notice this, I label it, and now I'm looking for an entry. Now, because I have seen this SMT on the two pairs, I believe that now price should not go any lower than this, because this is some form of sweep. This is some form of sell side liquidity sweep. Okay, let me just label it. So I assume that this is some form of liquidity sweep. So what do I do at that price point? Go down to the 1 minute time frame. Let me just zoom in and zoom out. I don't know if and I really need to get myself a premium. I'm stingy with paying for the premium. Okay, so here is how I actually took this entry. I took it on the 1 minute chart. I zoomed in on the 1 minute chart. So I hope you can notice how I am going with the order of time frames. I do not jump from a lower time frame to a higher time frame, from a random higher time frame to a lower time frame. I'm going with the order flow and the order of time, because you see that we started with the daily, with the weekly, daily. I went to the hourly chart, I went to the 15-minute chart, I went to the 5-minute chart, and now I'm on the 1 minute chart where I do my execution. So once you look at this as your liquidity sweep, and we have SMT on the other pair, remember this. Remember that on US 500, we had a higher high, a higher low form, while on US 100 we have seen that we formed a lower low, which was a liquidity sweep. Okay, so what actually ICT suggests is that you should trade the pair that has formed the high. But that day I was feeling quite confident and excited, and US 100 offers more money of some sort, so I did go with it, which is somehow against my rules, but it is what it is. So yes, you can see that we did not sweep the 815 low on this asset, while we did on this asset. So once that was swept, I labeled this as my last down close candles. Okay, and once we had a close above it, above that, which was right here, that is when I took the trade. Okay, and where will be my stops? My stops will be below this low that took this sell side liquidity, where the SMT is. Okay, that is my safest low. And where are my targets? So once I had that close and I took an aggressive entry, or you could have waited for that retest. So that is where my entry was. This is the change, 1 minute change in CSD. So you need to notice that this is now a 1 minute change in state of delivery. My stops were that low while I was targeting. Remember that I had the previous day high, and I also had the buy side liquidity. Okay, so we can go to the 5 minute for a better view, since you have already seen how I took that entry. Can now go back and I show you the what, how the entry played out on a higher time frame. Okay, so you do remember that I always trade to the what, I always trade till the 4:15 normal closing hours. Okay, so I'll just put this up to the 4:15, and then I will explain something very interesting. Okay, so during the PM session, if you are on my channel, on my Twitter, you'll notice that I added a few positions. Okay, so at 1:30, let me just change this back to the 5 minutes. Okay, during the 1:30 open, I noticed something very interesting, because the PM session starts at 1:30. Okay, so this trade, you can see that I took it at 10:20. It dilly-dallied around my entry point up to around up to 12 noon, where I don't expect a lot of volatility from 12 to 1:30. So when 1:30 came, I was checking what price wants to do, and then I noticed that after the 1:30 open, price swept this AM session low. This is a swing low in the AM session. So I marked it as a sell side some form of sell side liquidity sweep. Okay, and then I noticed that again SP500 was unable to do that sweep. So what do we have? We have another SMT, a higher SMT, and we have this other SMT. So if you had missed the AM position, you could come at 1:30, after the 1:30 open, which is the PM session. You could come and wait for this sweep and then trade the continuation move. So this was my last down close candle before the sweep, right? So this is another change in state of delivery. So if you did not take this position right here, you can add it here and move your stops here. So at this timing point, I added 2 more entries, and I moved this stop loss from this point to this low, because now I believe that we had already confirmed a sweep and we had already closed above the last down close candle, thus confirming another change in state of delivery. within the bullish move from 930. Okay, so now it's a re-entry point as well as a confirmation to add your entries. So I added a few more entries with my first take profits. I wanted to take my first take profits at the previous day high, but we had an issue during the close. I usually close all my trades during the 4:15 because that is when the trading floor officially closes. So those are the normal trading hours from 9:30 a.m. up to 4:15 p.m. Bearing in mind we have the 12 to 1:30 New York lunch session. So the normal trading sessions run from 9:30 to 4:15. Okay, so at 4:15 I noticed you can see that price had not swept liquidity by it had not swept the wicks, but it had already swept the bodies of the previous day high. So what I did is I closed 90% of my entries and I left a few, but I moved that stop loss even much higher because I moved once I closed the 90% of my profits at 4:15, I moved my take profit to around this 23 5 5 what 23 519 level. Why did I move it to 23 528? Because we had this inverted fair value gap, and I did not want to see price come back anywhere here without me getting the remaining entries. So I left those remaining, and you can see that price, the take profit was to be taken off at here 23 586, which happened the next day, but you remember that my stops were at 23 520. So when price came back at 4:45 on Wednesday, that is when my remaining entry, the 10% that was remaining, was closed. But remember, I had closed 90%, almost 95% of my profits right here at 4:15, which was only 5 pips from my, yes, it was actually 5 pips from my target. So that is how I traded the Tuesday longs. So I hope you've understood that, and I hope you've understood that. So let's move on to the Thursday trade. So that was my win on Tuesday. On Wednesday, I did not trade because I was running a few personal errands and I was not able to be on the charts. So let's move on to the Thursday trade. Okay, I'll just delete all the drawings and I'll do the same on US 500. Yes, my bad. Another reason that I closed 90% of my entries is because on US 500, you remember I told you when we started, this trade was supposed to be taken on the weaker pair or the stronger pair in terms of bullishness, which was US 500. So once I saw that we had closed above the previous day, we had traded into the previous day high, it could be some point of reversal, and because it is 4:15 end of normal trading hours, it is very wise, and it was wise to close 95 or 90% of my trades, and maybe leave one entry as a runner to run to maybe higher levels. Okay, yes, so I had forgotten to mention that. So let's come to use 500, clean the chart, and then we can start all over again from the daily chart on Thursday. So on Thursday, as I came into the markets, remember I had already gotten some really good wins on Tuesday. And like we said, don't ever let the wins get to your head because they will affect your trading. So, okay. Let's see how I did this. So when I came to the markets on Thursday, remember the trade that I've just shown you is for Tuesday. So on Wednesday I did not trade due to personal issues. I had some personal errands to run, so I was not on the charts. So on Thursday when I came, we are assuming that we are not okay. When I'm showing this, assume that the Thursday and Friday candles have not formed. So all you have is Wednesday, Tuesday, and Monday in relation to that week. Okay, so we have Tuesday, we have Wednesday, and we have Wednesday, Tuesday, and we have Monday. So like I said, when I open my charts on a daily from Tuesday, I start on a daily chart and I observe what the daily chart did. Okay, so when I came, I noticed that Tuesday's range had been traded into by Wednesday's trading. Okay, so this is Wednesday trading, this bearish candle right here. Okay, and then I came to US 500 and I noticed that we should I think we actually had some form of wick, yep, right there. Okay, and we have the Tuesday low, because that is how trading is done. You have to start on a higher time frame and then go to lower time frames. Okay, so let's look at this price action. Price traded on Wednesday. Now this is, remember, this is on a Thursday morning. I'm looking at how Wednesday trading in relation to the previous day, the previous 2 or 3 days. So you can see that Wednesday traded higher, swept this previous day high, swept Monday's high, and also it swept this liquidity, this buy side liquidity. Okay, but price was not able to close above any of the swept buy side liquidity. All right, same thing on US 100. Price traded above the previous day high, Monday's high, and this buy side liquidity, but price was not able to close above any of the swept buy side liquidity. So what does that tell me? Considering that we were on the last week of August, how a bullish candle forms is that we get our open, we get our open, we trade lower. Okay, just use an arrow. A bullish candle forms this way. So we get our open. Okay, I'm sorry about that. Get our open, price trades lower, and then it trades higher, it expands higher, and then we get a close lower. That is our typical bullish candle forms. Okay, that is our typical bullish candle forms. We get an open, we trade lower, to sweep liquidity, and then we trade higher, and then we come to the close. That is what we call the open. We call that the open. We call that open, low, high, close. Okay, and then for a bearish candle it is the opposite. So remember that this month I was expecting bullish prices, so we already had our lower prices reached, and then we have this expansion. So what I was expecting was that maybe at some point this week we could get this last part of the monthly candle formation, which is the close. Okay, so I will explain more. I do not worry very much about the OHLC and OLHC, because those are concepts that can be explained to you in a video or two. So right now let's just focus on the trade. So when I saw that price had done this and closed back inside all those swept ranges, what came to my mind was that this we could be setting up for a reversal. Okay, so after I noticed that, now I go to the lower time frames, because as I have told you, after a daily candle you go straight to the 4-hour candle or the 1-hour candle. So on this particular day I went down to the 1-hour candle. Okay, and I'll just delete this because we have already seen what those levels are on the daily chart. So I'll just label my midnight levels as usual. That is my midnight open daily divider. I call this vertical that I mark on the midnight my daily divider. It makes your work easier because you are able to spot the difference between Wednesday's trading and Tuesday's trading and stuff like that, because I am a time and price trader, so I need to have that clarity as I trade, that this high was not inside Tuesday's trading or Monday's trading or a specific day's trading. So once I had that, then I will also mark the usual 9:30 and 8:30, which can be done better on a 15-minute. So allow me to mark those first so that we can proceed. Okay, let's just cover let's follow the order of time frame so that it can be explained better. So here we go. So we on US 500 we had this midnight open, price traded lower and then it traded higher, swept this previous day high. This was Wednesday's high. Okay, we can see that price swept the previous day high right there, and if you have been listening to me, you know that that is a buy side liquidity sweep. So, and remember, we have that reversal idea in our heads from the daily chart. So that was a liquidity sweep. When I come to US 100, I notice what? The previous day high is still intact. Okay, the previous day high is still intact. All right, I guess you can already see where I'm going with this. So one of the assets has formed a lower low, while the other asset has formed a higher high. This one has formed a lower high, and US 500 has formed a higher high. So that becomes an SMT. And remember, I have that reversal idea in my head. Okay, so now I'm already starting to see signs of a reversal. Okay, that is the SMT with SP 500. Okay, so once I had those marked on my 1-hour level, I went down to lower time frames to now look for an entry. Okay, and I went down to the 15-minute time frame. So on the 15-minute time frame, I'm looking to label the order block, okay, or the last up close candle that took that buy side liquidity. Okay, so which set of candles did that? These two candles. Okay, so I marked that as my that is actually my order block. Okay, bearish, not bullish. Okay, so once I mark those as my that pair of up close candle as my, I went to these other assets, and which was my last pair of was those ones. Okay, and I labeled it as my bearish order block. That is my order block. All right, so now remember, I will usually always wait for 8:30 and 9:30 to open before I take part in any trades. So let us mark those two, the 8:30 open and the 9:30 open. Okay, just mark it like that. This is the 9:30 open, this is the 8:30 open. As I have told you in the first trade, these are some of the most important times in my trading, so I always mark them. You have seen from my screenshots. Okay, so I have those two. This became a valid order block and a valid change in state of delivery at a very early time. Okay, all this occurred before 8:30 and 9:30. Okay, so this has already become a change in state of delivery. So we have already closed below those candles, and now as I was waiting for the 9:30 and 8:30 open, all I wanted to see was a retracement and then a close outside that price range, so that I could hop on that short setup. Okay, so I'll also mark the 9:30 on US 500. That was the 9:30. Okay, so at 8:30 and 9:30, something that I did not expect to happen, but price moves in. I've seen so many things in price, so I wasn't really that shocked. So here's what happened. You remember I had these levels marked the previous day. I had not been swept, the SMT, the change in state that had already occurred, right? Now at 9:30, this candle formed. Okay, so I'll get this line off. This candle formed, and this candle swept the current daily high on both assets. Okay, you can see that, but it did not occur on I'll just clear the 8:30 and 9:30 open. You still get the idea, so I'll just delete them for clarity. So you remember, this was the current daily high, this one right here. So at 9:30, this raid occurred, and because I'm expecting lower prices, I did not take it as a change in state to the upside, but I took it as a liquidity sweep. All right, so what did I do? I marked it as a liquidity sweep. And then, since now this SMT is not valid. I deleted it, and also let's delete the previous day high. And remember, we have this change in state. Okay, so once this one was closed, I also delete this change in state, and now this one becomes my order block. All right, this huge upward candle becomes my order block. All right, so I marked it, and as soon as price closed below it, I marked it as my change in state. Change in state of delivery. Remember, I am waiting for bearish price action. Okay, so the sweep had also occurred on. This is what actually gave me more confidence, because you can see that on US 500 it was only a week. There was no body that had formed to confirm that it was to confirm the close. Okay, so that is what I did. This gave me more confidence, because if it was a body, I would have actually started to look more into price. Okay, but I did not, because I saw it as a just a liquidity, one last liquidity sweep, a 930 reversal, because it was starting to look like some form of 930 reversal that could occur on a bearish or a bullish day, where the 930 sweeps all the current daily highs or lows, and then it proceeds to expand to the main move of the day. It is what we call a manipulation, because it sweeps and then we reverse to the downside. So that is what I did. I took the trade on US 100. Let's go to the 5 minutes so that you can see what I was seeing better. So once we had this close, and then we had this retesting to the change in state of delivery, I took my first position. Okay, remember, I usually take one position and then I add more positions as price confirms that entry. So what were my targets? I have left out a very important part of this trade that I should have explained on the 1 hour chart. So there is some form of so on this particular day, I was actually targeting this liquidity, this trend line liquidity lying right here. So you had this liquidity. This is what I call a trend line sell. Trend line from a retail point of view. From a retail point of view, just a minute as I label this correctly. So from a retail point of view, a retail trader will see this and expect that price will come to this trend line, then it will bounce off and go higher. But from an ICT point of view, or an institutional trader point of view, what we are taught is that price should sweep all this liquidity and then reverse to the upside. So this is actually targets rather than support. It should not offer resistance. It should offer support. Okay. So on that day, I wanted to target this sell side liquidity, this one and this one, in the form of a trend line. Also, we had this, but this one were far too behind. So my main targets were this liquidity and this liquidity, which was also more visible on the 15 minute. Okay, it is a trend line sell side liquidity. So instead of using your trend line, the trend line as a resistance point, as a resistance or support point, you use it as a draw on liquidity. Those are where your targets should be, or that is where your stops should be. Okay, so that is what I wanted to see. So when I took that trade, those were my main targets. My stops were placed on the current 930 high. All right, so right there, stops on the current daily high, only 5 pips above the current daily high. And then we have the first target. You take your first targets at the 2 a.m. low, and then on the previous day low, and then lower. Okay, that is how you do it. So that was a 2.2 risk reward ratio. So that was my trade idea. I was stopped out at 12. At 12, okay, I was stopped out, and then in the PM session I tried to add another position on US 500. Remember that after a losing trade you always go in with lower risk. Okay, so I came on US 500. I noticed that we had already retraced into 50% of the displacement leg that had occurred, but we had been maintaining the 0.2 level, 2.5 level. We had been respecting that. You can see that we had swept into it, but we had been respecting that level we were closing inside. And because that was a retest to the change in state of delivery, I took this as my last set of up close candles. And as soon as we had a close below this last down close, I took that entry. And as I took that entry, the risk was very tight. My stop was inside this displacement leg, not even above it. It was right there, and I was targeting the same levels that I was targeting on the first trade. Most importantly, the previous day low. And you can see what happened. I was stopped out almost immediately because I was stopped out at around 12:20. Yes, so that was my second trade, and I was done for the day. So that was my week. I did not trade on Friday, but we can see that Friday actually did the move that I was hunting on. Friday did trade the way I wanted Thursday to trade, and I don't think I would have caught the move because I really don't think I would have caught this move because things seemed to happen very fast. So I don't think I would have caught this move. But yes, that is how I traded the week. One win and uh, one loss on Thursday. Yes, so that is how I traded the last week of August. And looking back, what are the mistakes that I think I did? So as I look back, I think one of the major mistakes that I did was I did not wait for a higher time frame change in state of delivery before I went to look in for an entry, because I should have confirmed that, because if the reversal was said to occur on Thursday, I should have waited for a change in state of delivery on this 1 hour chart, okay, which we never got. Notice that. You see, once we had this sweep of liquidity, this was my last up close candle. So I should have waited for this sweep so that I can confirm we are now in a reversal protocol. Now, after getting this sweep, it would have been confirmed to go into the, you can see that even on the 30-minute chart, we did not get that close. So I should have waited for that to be confirmed on the 1 hour, or the, you see, I should have waited for this set of up close candle to be closed down, so that I confirm that the reversal protocol has been triggered. And then after that, I would have gone to the lower time frames to hand for my short setup. But you can see that the move occurred on Friday, yesterday, which I was not able to trade, also due to some personal errands that I was running. But I still don't think I would have caught it because uh, looking from this price action, price moved quite fast and there were no retracement towards, because for example, this would have been my breakaway gap, okay, this one right here, and as you can see, price never retested that price zone. Also on US 500, price might have retested that, but I highly doubt I would have caught that, because you can see that price did retest here on US 500, but it did at 8:30 and I normally trade after 9:30. So you can see that after 9:30 we never got a retracement to the upside. So also on this one, after 8:30, 9:30, 9:30 open, price just traded lower and displaced lower. It took out the sell side liquidity that I was aiming for on that particular Thursday. But so yeah, that is how I traded. Tuesday was a win. Thursday was a small loss due to, of course, sound risk management. So yes, that was my week and that was August. Stay tuned. I posted my August results on X, on my Twitter page. Also posted them on my Instagram, Chats with Courier. So you can check them out, and thank you for tuning in. I'll see you on the Monday video where I will do the September monthly preview as well as the weekly preview. So yeah, thank you for tuning in. Be blessed.